Okay, so if you're doing business in Vietnam or even just thinking about it, you're going to want to listen up. There's a huge change on the horizon. A brand new corporate tax law, Decree 320, is dropping in 2025. And trust me, it's going to shake things up. It doesn't matter if you're a small local startup or a massive foreign e-commerce player, this is absolutely going to hit your bottom line. So let's break down exactly what you need to know.
Seriously, I mean it. Are you running a business in Vietnam? Or maybe you're selling into the Vietnamese market from another country? Well, this is for you. And we're not talking about a few minor tweaks here and there. No, these are major, significant shifts. Getting your head around them right now is absolutely critical for your planning. So, what's the big deal? Well, this new law is changing the rules of the game in a few key ways. First, it's bringing in a whole new tiered tax system, which is great news for small and medium-sized businesses. Second, it's totally rewriting the playbook for digital and e-commerce companies. And third, it's rolling out some really juicy new incentives for certain key industries. We're going to dive deep into all three of these.
All right, before we start crunching numbers and talking rates, let's tackle the first, most important question, right? Who actually needs to pay? Let's figure out if this new tax decree even applies to your business in the first place.
And let me tell you, the net they're casting is wide. I mean, really broad. Of course, it covers your standard Vietnamese companies, no surprise there. But the real headline here is how it reaches foreign businesses. And this is the part you need to hear. It applies whether you have a physical office in Vietnam or not. It even pulls into cooperatives and public service providers if they're earning business income. The message from the government is crystal clear. If you're making money from Vietnam, they're paying attention.
Okay, this next part is where things get really interesting, especially for anyone in the online space. The law has completely updated the definition of a permanent establishment. That used to pretty much just mean a physical office or a factory. Well, not anymore. Now, it specifically calls out e-commerce sites and digital platforms. Just think about that for a second. If you're a foreign company selling stuff online to people in Vietnam, you could now be seen as having a taxable presence in the country. This is a total game changer for the digital economy.
Okay, so you've figured out the new law applies to you. The next big question, obviously, is how much is this going to cost me? What's my tax bill going to look like? Let's walk through how to calculate it. The basic formula itself is pretty straightforward, and you've probably seen it before. You just take your total revenue and subtract all your deductible expenses. That's it. What's left over is your taxable income. Sounds easy, right? Well, as always, the devil is in the details, and the real trick is figuring out what you can actually deduct.
Yeah, and this is a perfect example of what I'm talking about. The new decree gets really specific here. Things that are clearly for growing the business, like training your staff or investing in R&D, yep, those are deductible. But stuff like, say, fines you have to pay for breaking a rule, or fancy perks like a golf membership for the execs, no way. Those are not deductible. And getting this right isn't just about ticking a box for compliance. It's absolutely fundamental to planning your finances accurately.
But hey, it's not all about paying more tax. The good news is this new decree also opens up some pretty big opportunities. We're talking lower rates and brand new incentives. And this is where things get strategic.
And here's the first number you really need to tattoo on your brain: 15%. That's right, 15%. This is a new, much lower tax rate aimed squarely at helping small and micro businesses grow. It's a huge drop from the standard rate.
You can see the new tiered system laid out perfectly here. It's pretty simple. If your annual revenue is 3 billion Vietnamese dong or less, you get that awesome 15% rate. If you're a bit bigger, between 3 and 50 billion dong, your rate is 17%. The old standard 20% rate, that's now only for businesses making more than 50 billion dong. This is a massive shift, and it's clearly designed to give a major boost to small and medium-sized enterprises. The government is also using this new law to send a very clear message about its priorities. They are rolling out some major tax breaks for companies in what they see as key strategic industries. We're talking about the really hot sectors right now, like software, semiconductors, renewable energy, and high-tech agriculture. If your business operates in any of these areas, you really need to dig into the details of these new benefits. And believe it or not, for some businesses, the deal gets even sweeter. Certain types of income are now going to be completely tax-exempt. For example, if you're working on certain scientific research contracts, that income could be tax-free for up to 3 years. Same thing for the initial sale of carbon credits, which is a huge nod to the green economy. They've also thrown in some powerful incentives for building social housing. Look, these aren't just tax breaks. They are basically giant invest here signs.
Okay, that was a lot of information, I know. So the big question is, what do you do now? How do you handle all this? Well, don't worry, we've boiled it all down into a super simple action plan to help you navigate what's coming.
Think of this as your 4-step playbook. Step 1, confirm your taxpayer status. This is non-negotiable, especially if you're a foreign digital business. Step 2, figure out your new tax rate. Are you in the 15, 17, or 20% bucket? Step 3, go through your expenses with a fine-tooth comb and make sure you're maximizing every single legal deduction you can. And finally, step 4, dive deep and explore if your business qualifies for any of those amazing new incentives we talked about.
And that really brings us to the final big picture question. When you look at the lower taxes for small businesses and these very specific targeted incentives for high growth sectors, it's pretty clear this isn't just some boring regulatory update. It's a bold statement about Vietnam's economic strategy for the future. So the question you have to ask yourself is, does all this make Vietnam an even more attractive, more competitive place for you to do business?